Stephen. Yeah, good morning to you. So I made this point a few times on today's show, and it's not just me saying it, but there's a lot of long-term fixes that are in the works at the moment when it comes to cost of living. But I mean, just listening to Peter Dutton just now and Anthony Albanese this morning, no one's got an answer on the short term.
Well, in the short term, the Reserve Bank should admit that they've got it completely wrong. The board and the governor continue to push policies that want to drive real wages down. They're actually actively creating a real wage cut with their policy. So if you want to
But they have to do it, though. They have to raise rights,
No, they don't have to do it. No, they don't.
But then inflation will just get out of hand.
No, inflation is being caused by supply-side issues that have got nothing to do with what the Reserve Bank say they're raising interest rates over. The Reserve Bank keeps saying wages are going to break out. Wages are going to break out. Well, their modelling is just wrong. It is not reflecting what's happening in the real world. Treasury, for 9 years under the Conservative government, the coalition government, said real wage rises were going to go up by 3.5%. It never happened. And now it's contagious because the Reserve Bank are trying to justify their incompetence and putting up interest rates by saying, there's a breakout in real wages coming. The system is broken. They don't know how to model an economy where the wage system is this broken. So they reach into their one and only kit bag and say, right, we're going to drive real wages down because that'll be the solution for ordinary Australians. This is, the prices are already coming down in terms of iceberg lettuces and all of those flood-caused problems. The price of energy and electricity is going to be affected by all of the international factors that have got to do with the war and Europe demanding all coal, gas, etc. They couldn't care less if the Reserve Bank put up interest rates. That'll make no difference to the prices of these issues. So all that happens is prices go up and people are getting further and further pushed down.
Well, it would though, wouldn't it? I mean, Philip Lowe's already said that he's made a mistake. Words to that effect.
But he's making one now. He's now making a second mistake. And he needs to be called out on it.
But you need to stop people from spending, because up until now people are still spending more or less across the board. So whatever rates have been increased to aren't doing the job that they need to do.
He's going to push this economy into a recession, and he is going to cut effective real wages by forcing interest rates to levels that are punishing ordinary Australians who haven't caused the inflation.
Yeah.
So he's got a demand-side solution for a supply-side problem.
Yeah,
it's supply-side issues that are driving interest, not the level of how much we're spending in cafes. That is not causing the prices of petrol, electricity, or foodstuffs at supermarkets to go up. That is not causing the problem, but that's what he's solving for.
But in the meantime, we've just got to roll over and cop it, though, because there's no other short-term fix. And that's going to be the case right up until Christmas, by the way.
No, absolutely. This interest rate that they're likely to put up today is just going to be another nail in driving the economy south. But that is his stated objective. His stated objective is to grind the economy into dust and to reduce effective real wages. That's his policy. The government say we want to increase real wages. Well, the Reserve Bank governor is trying to reduce them.
Stephen, good to see you, though. We'll have to leave it there. Talk to you soon.